in, because one thing I never knew, which I have now known today, albeit late, I wish I knew this earlier, is that you can actually be a CPA and be a comedian at the same time. These two zeros, nanikia mwetiruo zero ishi tarugama i zeros tuwapigie makofi tafadhali. And daddy amewambia mketi. I've come with my phone so that I time myself. Sitaki kuongea sana leo. Nataka pia tuongee kidogo, alafu from there tuulizane maswali kidogo, alafu from there to socialize kidogo. I had told chairman sitakuwa na haraka sana, but I've learned tomorrow morning again we have another engagement. So this fellow here, you know, mtu anaweza kuona na suti aone wewe ni CEO wa what company, lakini kumbe unaweza ongeza watu maisha namna hiyo. Lakini unajua all his dancing ni pahali moja tu. Not that you are a better not that you are a better dancer than us, only that you are more endowed. Kachini. Then Zero vile amefanya nikiongea for an hour, but because of him I'll talk for 20 minutes, kwa sababu amekava yote. Na the beauty, akona kipawa sina. Anajifanya ati anaongea mambo ya betting na ni andu aracambia. Ati meragwo ati anga no akunyanĩire makaheo rĩtwa wewe. But I have really enjoyed. Because many of you know my sister Lois, who is a CPA in this region. Na kama ni pesa hakuwa nayo ya kuja hapa, but next time nitamwambia akuwe anakuja. So we talked with the chairman and we had some of you in my office the other day. Na tukaongea mambo mengi. Wakanieleza sasa kwa sababu tuko na program and the other speakers. Nikawauliza sasa, what do I talk about? Because I don't want to go around so many things. And they told me talk about macroeconomics kidogo, the global scenario in the economy and markets, talk about investments. But they told me, don't forget to talk about shares. Kwa sababu wengi wetu tumenunua tuko na joto kwa tumbo. Kwa sababu missiles za Iran ni kama zingine zinaaguka huko. So that's the reason why I'm here, and I'll try to condense and compress. But I have to say that I am very pleased to be part of this team. If there is one day there'll be honorary CPAs, I know I might be nominated to get one, because I am now almost a member of his pack. And when the Muranga team was up, starting being introduced by Daktari, the reason I didn't want to leave my seat is because sikuwa nataka kuruka bere ya darama. Because I'm not yet what you are. And it's good to admit that you guys are learned. Tukafanya hesabu gumu sana. Tukiwa university, I used to see some people rushing to KCA to do CPS. As we chose a different path, so we should heshimu that you have done what you never did. Of course, I am a member of parliament for Kiharu, as you know, and it's good for you to know, some of you who are not there in Mombasa, that Kiharu is a large constituency, one of the largest in actually this region, because primary schools alone are over 112. And I want to confirm to you, because accountants, the name or the word accountant came from being accountable. And being accountable is saying what you are doing. Out of all our public primary schools, which are many, all of them are tiled. All of them. Zinakaa hapa chini. Na tumefanya zote zikakuwa kama academy in terms of that kind of works, many facilities, good infrastructure, and they are well done. We have 65-day secondary schools covering over 12,000 learners in Kiharu. And I want to confirm again that fee in Kiharu for all our day scholars is only 500 per term, 500 shillings. And the bulk of the other money is supported by Kiharu NGCDF and a program we call Kiharu Masomo Bora. And out of that 500, learners sit in school from Monday to Saturday, because we also want them to go to school on Saturday for remedial. And they actually take a mix of githeri rice within the week, and the last Friday of the month, they eat chapati. I'm not promising them, they have been eating. So, sio ile ya kusema, ni ile ya kufanya. Na yetu tunafanya na jiko. Every school has a jiko, so we never had to procure any machine. So, it's doable. It's doable using the local resources. And we have now 65 institutions which we've been able to cabro. Zile picha mnaona za cabro, tunawekaga every holiday. We've now done up to 65 institutions, and we'll be doing others in April, others in August. It's work that is continuous, and it's always work in progress. Now, to come back to the point of today, I was in the UN today morning talking to comrades, and especially young men who are in the university. And I was rushing to catch time because chairman had told me to quit hapa by 2. But I'm glad you are able to cover many more things before we came. Na hatukuwachelewesha because the program was running. And for that reason, I'll try to go direct to the point. And I don't want to refer to notes because I want to have a conversation for us to understand macro-wise, macroeconomy, because most of the decisions we make in investments and the decisions we make in the organizations we are leading and spearheading, there's financial side, is the fact that even if you are a water company, or you are a consulting firm, or you are a bank, or you are Kenya Power, I have heard there are CPAs from Kenya Power who are here. You don't operate just because of your entity. You operate because you are part of the bigger scale of things, nationally and internationally. Unfortunately, many times, we don't give a lot of weight to the things that happen even globally. Yet they come to affect us like they are happening outside of our doorstep. Some of the things that actually happen globally, they end up affecting us more than all the plans we could have in our own singular companies. So it's always important to understand what the world is doing, where the world is going, because ultimately it reaches on your table, including your food. It reaches in your pocket, in your wallet, and in your bank account. Part of the reason why I am going backwards to come forward is because many of the decisions that I also make in terms of leadership, but also in terms of investments, I have to tire my mind a little bit to look at the globe. I can't talk about which share. I can't talk about where I'm getting a job. The students who are here can't talk about where the opportunities are without in isolation of your own village and your own country. It can't work because the world moves like weed. Even if you wanted to do something around the direction of the weed, you can only navigate around where the weed is going, not against, unless then you want to do extra work. So, the global economy has been on what we call monetary tightening for some time. Since Corona, all the economies of the world lowered interest rates to accommodate Corona. Because every time there is a global shock in the economy, and the economy needs to be incentivized to grow. Wakati unataka kukuza uchumi, the one tool that is usually available for any government is interest rates. So what do you do with interest rates? You lower them. You lower them with the hope of putting money in the pockets of people, making money cheap. When money is cheap, it is accessible. When money is accessible, people spend because they can access money cheaply. And out of that expenditure, the people in government hope that that expenditure will spur production. Because I'll take more soda, I'll take more water, I'll buy more new shoes. So out of that consumerism comes from production. So they hope out of that the consuming will spur the production side. So out of now that, what is called monetary easing, which was there during Corona time. So the world was awash with money. Either through interest rates, others were being given free money. Free, meaning not just interest rate is zero. Even the cost of the money was zero. Like in the US, they had what was called COVID checks. Can you imagine free money? Not you work for. Government is soothing you to spend. So in the hope of soothing you to spend, they actually give you money to spend, free. So what happened in the US economy? Because so much money was chasing so few goods, inflation came up in the US, and in the entire world, inflation started to climb up. To tame that inflation, all the economies of the world again started to tighten. Tighten means you raise interest rate. After raising interest rate at some point again, so in this era, before Iran, the entire world was through monetary easing. Interest rates in CBR were coming down. US Federal Reserve rate was coming down. The central bank of the European Central Bank was easing. China was easing. So the entire world, before Iran, has been going through monetary easing. Interest rates have been coming down. I'm sorry for these jargons, but there's no point I go to which year you can buy. It doesn't make sense if you don't understand what is it that you must always look for. Secondly, now we come to Kenya. And I'm talking about forward, not necessarily history. Kenya is here. We've been doing monetary easing, lowering interest rate, higher. Our inflation has been seeming manageable for the last few months. But now we are where we are today. So an economy growing at around 5% GDP. So inflation has been within the benchmark. Benchmark inflation in Kenya is around 5%, but they give a band of 2.5% either way. So up to 7.5%, up to 2.5% down. Now, inflation has been three things. One is fuel, the other one is food, the other one is called co-inflation. So food inflation is when we demand more food, but we can't produce that much food. So food prices go up. So fuel inflation is everything about fuel. Transport, fuel itself, it has been stable for some time until next month. Until next month. We've been saying we have done well with dollar, etc. Those two stories. I'll mention about that story just now. So, inflation is three things. Food, fuel, coal. So, two things touch the mwananchi direct. Food inflation and fuel inflation. And they are the most volatile across the world. Co-inflation doesn't touch the general population too much because it's about imports, majorly. It's about things that are not food and fuel. Now, that has been good up to mid next month. And I'm telling you this because you are CPAs. In the organizations you work, you stop now thinking about Kenya the way you were thinking before next month mid. I'm forward. When you do PE ratio, there is something called forward and trading. So I'm talking forward. Start adjusting your decision making from mid of next month because things will change. Both on the inflation side and also interest rate side and also later in the year on the currency. But let me come back to the currency first due to understand Diane kidogo. And I'm keeping mentioning sorries for the jargons, but I have to do this first. Some of them did economics. Ah, very good. All. So munasika vitu nasema. No wonder you are so attentive, I'm wondering. I'm wondering why is no one sleeping? So hizi vitu nasema munaelewa. But we need to remind ourselves. Now, the reason I came is for us to have a talk based on the decision you are going to make today. I didn't want us to have a short lecture. Alikuwa hapa akatuongeleza story ya sia zile anaongeanga hapana. I want us to start now refining our decision making in the organizations we work for. So Kenya has been lucky for the last 4 years. Kenya has been lucky because the world has been lucky. The world has been lucky to have oil per barrel by December was $55 per barrel. So as of Friday yesterday, Brent was around $113 per barrel. So now out of that being lucky, we've been hearing a story you have heard from every government official. We have been able to stabilize the Kenya shillings against the dollar. And those are the short stories. Now this is the thing. Because nataka, all these points you made them together to guide your decision making, including for investments. In 2022, that is when the world witnessed the highest price of oil per barrel. This barrel is the same one we end up buying in the petrol station. So it's the same barrel that gets you when you are fueling the car. In May, it was around almost $120 per barrel. In 2022, the year of elections. So the subsidy you hear came around that time because it was unbearable during a political year and the incumbent had political interest for them to just leave the oil prices to be market driven. Now, that of course brought inflation. So by the time you are doing elections in August, the USD to Kenya, the Kenya shillings to USD was 119 to 120 shillings per dollar. Now it is 129, 128 up to 130. Between a dollar of 119 and a dollar of 130, which is stronger? Where is the Kenya shilling stronger? 119. Very good. But now this is the catch. If you go with your phone anytime, you check about how the currency has performed, the greenback, the dollar. In 1 year alone, which is 2025, the dollar lost 10% against a basket of global currencies. So the dollar lost 10%. So forget if the Kenya shillings just stood where it was, and the dollar loses 10%, it means out of 119 which was there, 119, 90% of 119, we should be talking about 100 shillings to the greenback. And the best way to qualify that statement, in August of 2022, the dollar was 119. Euro was 116 shillings to 1 euro. But it's now around 149 to 151. The British pound was around 136 in August of 2022. But it's now 171 to 174. So I'm talking about this so that we see where our macros are, not based on what the politician says, but based on what the reality is. Because even that then affects your decision making as an investor and also as a policy maker in your organization. Now, come here to what you must look for also. And I'm already talking about investments in your office. If you check all the global investors, Warren Buffett, Bridgewater, all of them, because they do simulations of what happens in the world over 500 years back, you realize some of these investors almost accurately so claim that the global economy always have a reset, either a recession of some kind or some cold every 7 to 10 years. So every 7 to 10 years, you'll have a boom, but then a near bust. So from 2000 financial crisis, 2007, 2008, you remember now again, resets can come out of markets overheating or economies overheating, but they can also come out of unexpected global issues like even Corona. Corona now came and reset our markets without us knowing. But it was a mini reset because it was not market driven. It was more nature driven. And if you look at the tendency of the global economy, if you look at Warren Buffett and Berkshire Hathaway, they have been piling cash for the last 2 years. So Warren Buffett anaambiwa nunua hii, invest pale, anasema nagoja, kuna kitu nagoja. Anapile pesa. Now Berkshire Hathaway has over 300, I think, and 50 billion US dollars, just waiting for an opportunity to buy things cheaper. I'm almost getting there. I'm almost done with the jargons. Now, the reason I have said that, because you are professional in this hall. After you hear me speak, after you hear a senior government official speak, always go to the details. Don't go to the global things we say. Go to the details. So that where you are putting your money and the money for your place, and you are advising, maybe there is an accountant here working for Shell, for Total, so that you know how kujipanga, even you working in a SACCO, working in a microfinance, you actually need this macro data more than the economists in government because they affect your businesses directly. Always go to data. Data. Dig deeper a little bit. Let me give you an example. Something the government has said in the recent 1 month, which if you don't dig deeper, you then act on ignorance throughout. So we did an IPO for Kenya Pipeline. Kenya did an IPO for Kenya Pipeline. And because nowadays Kenyans are very savvy, Kenyans wakaangalia, wakasema back to the sender. So only 2% of Kenyans participated. Then one day I saw men dressed in suits in a very big office in Nairobi. They were coming to announce to Kenyans, we have had a very successful IPO of Kenya Pipeline, which was 105% oversubscribed. Now, a normal person, just an accountant who does not want to tire, you are all accountants, will act on that. Hey, Kenya, the markets are very good, companies are being oversubscribed. Can we also list our company? Maybe you are thinking about listing your company. And then you start fighting for an IPO. But on what information are you fighting an IPO? If you just scratch a little bit, without even digging, just scratching, then you realize this is an IPO which was only subscribed less than 3%. So the other money was political money from Uganda brought by Museveni. Was Museveni buying shares? No. What was he buying? He was buying control. He was buying control. Yes, power. He was buying to control the company. That give me shares, give me board members, but also give me veto power. Of policy, veto power on policy, but also veto power on CEO. And because Kenya was desperate, they signed. So the shareholders' agreement, there's nothing Kenya Pipeline can do without Museveni. So that is the IPO that was successful. The second thing about this IPO that was claimed by government as successful is that if you look at the category of local companies, you see 41% of the shares were bought by local companies. Just ask yourself, oh, you guys here, you work for investment companies. Did any of the one you work for buy? None, unless it's government. Because the 41% listed as government related, as Kenyan companies, was led number 1 by NSSF. Secondly was superannuation fund, pesa tu ya wafanyikazi. 3 was unclaimed assets authority. 4 was Kenyari. So those are the local companies that they were listed there. So you are there now as a policy maker. You have had news. It was successful, 105% oversubscribed. Then you start making about how our market is full of money and companies are being oversubscribed. But then after that, oh, the share hata haijaanguka vile Wakenya walikuwa wanasema. Si ndio sasa watu watasema? Why? The same company that was the lead transaction advisor was given a role with money to make sure they prop up the shares. Isianguke below 9 shillings within a month. Now, ask yourself as a CPA, a company listed in the NSE trades for a month between 9 shillings and 9.08. Just try to think, any company listed in the NSE is oscillating between 9 shillings and 9.08, oscillating around there. And those who work in the financial industry, because I think everyone who is a capital market know. So there is something called propping. So you create an artificial demand for a share, and you actually place it in the market. So when people are trading, they realize, hey, there is a block person here wanting to buy shares. So they prop it for a month, so that you don't embarrass the person who rang the bell. That they rang the bell and the share collapsed. After 1 month, kibarua iishe. So what I'm trying to say, you dig deeper for information, so that you make your decision not based on the superficial you see, but you make your decisions based on the reality. The reality is, for example, take that company with P/E ratio of 22, the highest in Kenya, in any listed company, including Safaricom, has a lesser P/E ratio of 13. The energy sector has P/E ratio of 6 for Kengen, of around 6 for Total Energies, and below 2 for Kenya Power. And then you are told to hold a share here with a P/E ratio of 22. Why? Make it scarce in the market. Because the retailers are only holding 2%. Let's mop it up a little bit so that there is no supply. And because there is no supply, so we can prop the share to the price we want. So we'll be holding mchanga. You know the way you can be told, shikilia mchanga kwa mkono, it may turn out to be gold when you open up your heart. Are you getting what I'm saying? You know, I can create scarcity of sad. I say hakuna mchanga ya white hapa. Wewe shika hii mchanga, tunaona kama itakuwa kwa bei kali. So unaishikilia, unaambiwa kuna time utafungua hivi, kuna mtu atakuja ainunue for 2 million shillings. So superficial decision making. I've used Kenya Pipeline because what I'm talking about is totally true, but also it may end up misleading somebody by reading data coming from government, but which is misleading. So always dig deeper. Let me go now to the real issue so that I sit down. Now I'm not talking about business. I'm neither talking about entrepreneurship. I want to talk about investments. And especially given this time you are in. People bought shares. Then they are wondering, hii share itafika wapi sasa? The Dow Jones in the US is yesterday it went down by close to 2%. It has gone down by over close to 10% in one month since February 28th. So you are here seated and we are wondering, what do I do now in this kind of time with my money? Of course, here CPS, we are no longer talking about whether you buy plots. That we already talked about in Mombasa. And I don't think anyone of you is buying their 7th plot yet now. I think you're out of that discussion. That's why I'm not going back there. I'm not talking about whether you fix your money in the bank today, because I think you should know better. I'm also not talking about active business, because active business is good. It keeps you active, but it also aids production. And I don't want to delve into that today. I'm a proponent of entrepreneurship and business. Whatever business you are doing, the more you expand it, the better. The more you do business, the better for the economy and for yourself. So I'm not talking about that also today. I want to go direct to investments and our demeanor around this time. The time when the global markets are being raided on. There is a cold that is permeating across all the global markets. What should we do now at such a time? And that's what I want to talk about in a few minutes. First of all, to discount that point, there is no one in this hall or anyone watching us online who has lost money in the NSC and they bought their shares for the last 6 months or 1 year, none has lost. And especially if you did your research to buy and you bought value, no one has lost money. Even the people who bought shares when we were in Mombasa, most of the shares we were talking about there, even after Iran, and even the NSE has been down since 28, those people are still enjoying profits even today. Why? Because our market has been grossly undervalued, including now. So the people who bought shares, let's say 6 months ago, let's say Kengen. Kengen was, let's be 8 months, 12 years ago, 8 months, 12 months ago, Kengen was still around 6-7 shillings. Even after paying dividends, Kengen is still around 9 shillings. But we are saying it has gone down, given where it was a month ago. Equity Bank was still in the 50s. Yet it went up to 80. It's now around 70. So anyone who bought, they are still enjoying a bigger profit than any other investment you could have done for the last 6 months or 12 months. Take KCB, was in its 50s. Even after paying special dividend and announcing another one, and even after Iran, the share is still in its 70s. Take NCBA, was in its 70s, it's now in its 90s. Take basically any Kenya Power, was in its 12, 14s, is now in around its 16s. After falling a little bit due to Iran. So this is the reason I'm mentioning those things. And I want to refer to this because I want to be methodical. All the time you are doing investments, you can buy land, T-bills, you can fix money. So the argument usually is, you know land you can't lose, and T-bills and fixing money you can't lose. That's usually the argument. But I want us to be sequential here. When you say you can't lose with land, are you dealing with the question of worth, or are you dealing with the question of liquidity? If I have my phone here, which is only one, and there is no other make of this phone other than this one, so I price it the way I want. But if there are a million phones out there, so the phone becomes liquid because there are many more people who can access it. So out of that liquidity, when there is any information about this kind of phone in the market, they get affected immediately because there are many and people are sensitive because of the demand and supply. So let us not confuse when you are investing between dealing with a liquidity problem and a value problem. The reason why we purport land doesn't lose is because it's not in the exchange. It's not tradable every day. That land is only exchanged only when you are actually selling it. Remember, in terms of oil and in terms of the other instruments, they are tradable every day. So any information in the market affects them every day based on the perceived information. Now, when you talk about money doesn't lose, fixing money. I think all of you as CPS know that is a fallacy. This is the reason. Now, the world, if there is a recession, for example, so shares collapse when there is a recession. And then what happens? The government, to incentivize the market, they lower interest rates. Please be sequential here. When money is lowered, there is a time US lowered interest rates to 0 in the 2007-2008 financial crisis. What does that mean about your money? It means the yield of your money is 0. So even fixing money also becomes 0. It's no longer paying. And it therefore means the yield of your money gets decimated 100%. If Kenyan interest rate is 8% and it comes to 0, it means the profit you are getting out of your money evaporates to 0. If interest rates moves from 8% to 4%, it means the yield of your money goes down by 50%. That is the reality. Leo sio jokes, ni ma jargons. But I'm hoping tunaenda pamoja. So you are in the financial industry as a bank. So you are making decisions today. You are in a microfinance today, and because you are CPA, you did economics, people are looking up to you. What are the things you are thinking about Iran and your company? Your mind should stretch beyond oil. Your mind should stretch between, even when there is D to G, we still have to pay our fuel. Somehow, we still have to demand dollars. So if a barrel of oil is up 50%, that should be talking to you about the demand for dollars in the next few months in Kenya. It should be talking to you about what the demand for dollar will do to the Kenya shillings versus USD. It should be talking to you about where should your money be now in this kind of demeanor. In which currency should your money be? That should already be speaking to you. Let me come back to the market. So every time there is a disruption, there was one internet bubble in the US around 2000. There was the financial crisis in 2007, 2008. There is Corona time, when the markets in the world collapse, including our own, because we are a global market also, so to say, because we accept also global financial flow into Kenya. So we are here now. This is not even a crash. It is a bump. The world is, yani, kuna mtu anastua markets. So here, because oil is so integral, oil has permeated to New York Stock Exchange, Johannesburg, to South Korea, to Kenya. So we are there now, and we are wondering, where do I invest my money? What do I do? Including me now. So what do I do? I have assets in shares. You have assets in land. I have assets in other things. So what should I do? Number one thing you have not to do, even as you find out what to do. Avoid panic sales. You know the way unaona share inashuka, then you are calling the broker, hey, uza kabla ishuke sana. Because you'll actually not be using the degree and the CPA you got in campus. You'll not be using it. You'll actually be discarding it. Avoid panic. And I'll give you some scenarios here. During the internet bubble, munajua hii kampuni inaitwa Amazon, ya Jeff Bezos. So Amazon was also an internet company. It was a reset of all internet companies. They all collapsed in terms of share price. Some even collapsed literally as companies. So Amazon by that time was valued by the market at around 37 billion US dollars. So the share price was around $113 of Amazon. As Jeff Bezos was gazing like this in the market, the company was doing fine. There's a difference between the company and the market. The share price collapsed to $6 from 113. So the valuation of Amazon came down to 1.7 billion US dollars from 37. It was down over 90%. 90%. You know, this looks like far-fetched. We are talking about your 1 million you had put somewhere. Na mtu anza kukwambia iko 60,000. That's what we are talking about. Yani unapigia broker, hiyo kitu yangu imekashona iko aje, anakutumia portfolio valuation, which was $1 million shillings, it is reading 65,000. Now, a few, of course, months later, it rebounded. It's the same company we are talking about today with a valuation of over 2 trillion US dollars today now. Now, if you study many companies, what happened in the 2007-2008 financial crisis, it is replete with those kind of stories. People, you know what makes the share price to collapse? Because there are so many people supplying, but there are no people demanding. It's the same thing that makes the banks run. Bank run is a bank collapse. is when we go to Equity, to any bank to demand all our savings. But is our savings which you have lent your brother as a loan. But your brother is not queuing to pay the loan. But you are all queuing to receive the cash. So that's what is called a bank run. Because we are demanding what the bank does not have in liquid. So even in the equities market, we all want to sell. But everyone is fearful. And when everyone is fearful, there is no demand. When there is no demand, and there is a mismatch between supply and demand, supply takes over and the price collapses. Now, I've been a proponent and I want to request us even today. Avoid being a trader. Avoid being a trader. Always be an investor. When you're an investor, you will never care about the share price. You will care about the value. I gave you this example. I'm giving it because it's public information. So the company, the NSE in Kenya collapses like in 2003. After collapsing, the share price of many companies collapsed. There is a time in the last 3 years that KCB shares were trading at around 25. I'm not talking about decades ago. I'm talking about 2 or so years ago. KenGen collapsed to like 3 shillings and 50 cents. Kenya Power was at 1 shillings 80 cents. That is the time you need to apply value investing even better. Why? I've told you there is the company here and there is the market here. So let's put company, KenGen, but we also put another company there. You are allowed in Ebu. In the same, put another company, that is the investment vehicle. You are allowed in Kamuru. It's also part of that. And put Safaricom share. All these are where your money is. Tuende pamoja. Okay, where is our money? Can somebody shout? Anywhere your money is? Come here. Because I'm almost concluding. Come na kitambu. I want us to put fundamental one side and the market the other side. So in the fundamental we put in draw a line here. Draw a line here like in your book. So on the left side, let's put all where our money is. One person said MMF. Second one, I'm asking about your money. Just shout where your money is. Kenya Power. Another one, Co Bank. No, Co Bank in terms of share or in terms of deposit. Put both. Co Bank as a share and the hapo chini Co Bank as a deposit. So that one can start for all the bank deposits. LAD, put LAD. Put LAD, put SACCO. Put Forex. Forex means you are holding dollars or you are holding euros. Okay. Please mention any other. It is in cows. Weka cows. Put also avocado. Yes. What else? Yes? Mansa X is still one of the, put it, yes. Crypto. Weka crypto. ETFs. Mswali. Mattress. So mattress will start for real cash. So let's go sequential. Good people. Gold. Weka gold. Very good. If we had a longer session, we would have seen how and why cryptocurrency is behaving the way it is doing and why the gold is behaving the way it's doing. But you only homework in our pair. But there is a correlation of all those things. When you watch CNBC and you understand it, you actually almost preempt what the other one will do when you see only one trigger. Now, MMF shares, LAD, etc. Those are investments. Are you together up to there? Of all the things we mentioned there, how many are not tradable? How many, once you put your money, you wait for a certain period of time before making a decision on it? T-clad. No, shares is tradable. Unless you're buying an unlisted. Very good. Actually put shares. But private equity. Private equity shares. Hapa too. As the last one. And you tick it. It's not tradable. It's like SpaceX in the US. One of the companies owned by Tesla. By Elon Musk. So it's not traded. So it has no vagaries of the market. Doesn't matter where the market goes. It's not tradable. In fact, put family bank shares to make more point. Put SACCO shares to make even a better point. Because you are all in them. Now, when there is a global shock in the markets, does it mean there is a global shock in the economy? Sometimes yes, sometimes no. Sometimes the global shock of the economy causes the global shocks in the markets. Like what we are having today is the global shock in the supply chain of fuel. Out of that, the fuel price goes up. So that is the production side of the economy literally. So it is the economy that is triggering signals in the market. But the others that just happen, let's say bubbles. A bubble happens because the markets have overheat. The companies are priced so high that it doesn't make sense. Let's say, tuanze kuziana hii maji kwa auction. Jiro waseme 100, na mimi niseme 200. Jiro waseme, lazima watu waone mimi ni mwanaume. 250. Then, these other Jiro comes, 850. Now we all say, wacha apewe hiyo maji. But is that water worth the 850 shillings? That is how the markets work. So let's come here. One thing that is not tradable is the land. 2 is privately held shares. The third one? SACCO shares. Please keep ticking. Bank deposit is not tradable. Mukikubaliana na bank unanilipa 8%, you are not going to trade it. Is that so? Even when you buy T-bills, but you are not trading them in the market, they can also pass as non-tradable. Most of them could, because it depends with your choice. Because already agreement, mumekubaliana na government, utanilipa 10% after a year. So wewe kama utaki stories za market, si unaenda nyumbani unagojea your 10%. So, wanasema MMF, but depends. That one is half-half. Or okay, we can put it. Now, what are the ones that get traded in the market? That your worth is determined daily. Shares is number 1. Forex. Gold. Oil. Very good. Commodities. Gold plus commodities. Crypto. Precisely. Now, if I hold land here in Ebu, 10 acres, and then you hold a 10% stake in Family Bank, which is not selling their shares in the NSC, and you are told that 10% is 2 billion shillings. Whether the market in Kenya goes down or up, do you get affected? Do you get affected? No, directly with in your wealth. There's no effect. Is that so? Yes. Now, if Family Bank lists tomorrow, your 2 billion shillings, which was your worth in Family Bank, the share price goes down, and it becomes 1 billion. Have you lost or not? Have you? Are you sure you have lost? Have you lost? Let's say talk on the basis of 2B. That's our base. So the valuation comes down to 1B. Have you lost?
Okay, you only lose when you sell. No effect.
Jiro, say something.
If the company itself has no change, no effect. It's just the pricing. But it's like if I have a goat and someone in the market says it's 10,000, it has 5,000, but my goat weighs 15 kg. The 15 kgs have no change.
You lose when you sell.
Nataka tuulizane hii maswali. Yes, my brother.
If I sell, I lose. When you sell in the market,
Yes.
at the prevailing market prices,
Uh-huh.
you choose not to
Yes.
hold on.
Yes.
You are
Yes. Okay.
Now, I bought KPLC.
Yeah.
It was 1.35.
Ooh. Please say that about especially the second one. Yes.
Yeah, okay. Thank you. I'm saying about KPLC at 1.35. And we are in group of accountants and told them, you know, it's 1.35. It's undervalued. Let's buy. Yes. Me, I bought around 1,000.
You bought how many?
1,000 shares.
Yes.
And I just said, let it be.
Yes.
Today is around 17 shillings. So if I decide to dispose, I have more value because it's my decision to dispose.
Yes.
But if you don't dispose, you don't lose.
Higher. That's a good point. And that's why I want us to conclude that. The reason why you are saying your land in Ebu has not lost value, and the reason why your family bank shares has not lost value, and the reason why your SACCO shares purportedly have not lost value, is it a matter of losing value or is it a matter of illiquidity? That's what you need to always, I mean, if you need cash now and you hold that land in Embu, can you get it today? So, when now you see when the markets are volatile, the thing you have to keep on asking yourself, that land you have in Kitagera, do you call your land agent every day to ask about the price of land in Kitagera? Then why are you calling your stockbroker every day because there is Iran? Why? Now, that is where the opportunities come in. Value investing is looking at parameters that I'm buying a company cheaply. When I buy a company cheaply, I don't care whether the share price goes down. In fact, I care more when it goes down because it gives me value to buy a bigger stake. So, when you do your math, and I'm summarizing, take for example in Kenya today, and I'm being very frank. If you have 1 million shillings today in Kenya, and we can all agree, Jerry bought shares after Mombasa, some of you bought, the ones we talked with, no one has lost money, even after Iran. No one. So what does that tell you? That yes, the graph may be this way sometimes, but it's usually this way as it goes up. How comes even after the Dow Jones are down to 45,000 in the US, how comes they are still higher than during Corona peak, before Corona peak? How comes? Because even after the collapse after Corona, the markets have a way of dusting themselves off and also continuing with safari. Because many companies evolve in terms of growing. As the global economy grows, as the population grows, naturally, for example, Coca-Cola, they'll sell more Coca-Cola to more people. That's the mentality you always have to have. So this is the time for you to use your CPA even better. If I had 1 million shillings today, around this time, if I had land, if I had fixed deposit, if I had government instruments, I would sell them tomorrow, on Monday. I would sell them and first of all, hold some cash a little bit. And hope and wish the NSC will still go down in next week. Still, I'm holding shares. I'm not saying I've sold what I have. I will hold what I have in the stock market. But believe you me, I would dispose, fixed deposit, liquidate cash. If somebody would buy my land, I would sell it. If somebody would buy my unlisted shares, I would sell them. Why? They have not been affected by the noise of the market. They've not been affected. But there is a lot of value in the market that has been affected by the noise. This good cow, ambayo bado maziwa inatoa ile ile, lakini imechafuliwa na imerara kwa, cow shed. So hiyo ng'ombe imerara ikapata uchafu. So ikatoka nje, kila mtu anasema, "Hey, ng'ombe nayo sigioshwa kwanza kabla ya kuletwa soko. Mimi ningetaka kununua hiyo haijaoshwa. Because a gallon of water will be so cheap for me." So utapata ng'ombe ya 70,000 just because it is dirty, kila mtu haitaki. Anataka, anasema, "Hey, mimi wacha ni kale kameoshwa kamepakwa mafuta ndio unataka." This is the time in the global economy, and you can write this. Tutakubushana baadaye. This is the time that will make people more wealthy, not even the previous times. And by the way, the hope is bado effect ya market ikuwe prolonged kidogo, so that hii equity ilikuwa 80, mi hata ikikuja 70, can I tell you, even at 100 it is still cheap. Even at 80 it is still cheap. At 70 it is still cheap. But hata ikikuja 10, the better for me as a buyer. But is there that chance? I doubt. Now, how do you can see it. How do you evaluate now all that? Because I can tell you, when the market affects a company, that's the best time to buy them. Not in the good way, but in a bad way. Especially when there is no fundamental change in the company. Take banking in Kenya. The only risk that could be in banking is Forex. But who is more creative than a bank in this region? When the dollar goes to 200, they are still in money. When there is volatility in the exchange rate, they are still making money. When the interest rate is 0, they are still making money. Because their money is in margins. Whether the CBR rate is 4, their money is in margins. Whether it is 20%, their money is in margin. So you are here telling me that Equity Bank made 75.5 billion shillings. 75.5 billion shillings. And because of Iran, so the share price comes down, and the company made a 52% jump in profit, and you are telling me to sell the shares. I think the question should be, how can I